Good morning, welcome to Nifty Prediction. My name is Narendran. To join my WhatsApp group, I'm charging 1000 rupees per month. You will get advanced prediction details as well as calls in the group, and you will get the predictions well in advance. Before going to the Wednesday's prediction, I will review the Tuesday's market. Nifty ended up in the positive 14,563.45, 78.70 points in the positive, 0.54% in the positive. Opened around 14,473.80. Low went around 14,432.85. High went around 14,590.65. Let's go to my prediction review. If you check my past video, I have specifically mentioned about this. If the market is opens in the negative or in between the volatile range, because we have a hint, all indications are showing positive, but this particular indications which having a difference of 1 point, which means it might open in the downside, means it has a chance to recover from the low. If it is opens in the positive side, means it might have fallen down. So it is vice versa kind of a, if it is happened like that. So that is what exactly happened. You can check. I have specifically pointed out these two levels of average, volatile level 1 and the volatile level 2. In between, if the market is opens, it is kind of a volatile market, but we have the bullish thing, because all four indications showing in the bullish. So exactly that is what happened. If you check the previous closing, it has opened in the negative, so which means previous closing it has opened in the negative, but somehow it is not broken the volatile level 2. So if it is below the volatile level 2, means it might have chances to go bearish with the stop loss of overall average or the pivot average. So this is the method, but it is clearly inside the volatile level 2. So it is inside the volatile level 2, which means it is showing that the market having chances to recover after the low is matching in the data. So exactly that is what happened. It has fall down a bit, but somehow not able to break the support level 3 stop loss. 10 points as stop loss are normally used to keep for the buying, minus 10 points. So 14,426.95, that is not broken. So clearly from that level, also market has recovered from the low towards to the positive side, and clearly not able to break the volatile level 2, as I told, 14,596. So it is going to in between trade on those levels. Exactly that is what happened. Market has traded in between those levels after opening, but it has broken the lower side, but not able to go beyond the level of bearish or bearish open target lower in the negative average, because if it is, it has to stay in the negative itself, it has to break the negative average, but it has clearly kept the low in the support level 3. Let's go to the prediction for Wednesday. Wednesday market, it is indicating negative side on the ratio 5:7, average indicating 1:2, the difference of 1 point what we saw on Tuesday, and weight is indicating negative, and absolute frequency evenly poised. So which means on the average it shows once again volatile having chances. So if it is open negative, it might go towards positive. If it is opens positive, it might go towards negative, so vice versa. But this one indication which telling that we need to play much more cautiously whenever evenly poised comes, which means it is indicating all three results are possible: bullish, 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 bearish, or in the flat range. So all three results are possible if the market indicating this kind of evenly poised. So which means we need to play much more cautiously. You need to keep both options in hand. Even if you are buying somewhere around 10 rupees or 20 rupees, whatever it may be, you need to book profit every now and then. So better idea to trade on this particular Wednesday is you need to buy two lots on the each side. If it is 10, for example, I'm telling each side you need buying on 10 means one lot you need to exit when it is reaching 20. So remaining one lot will become remaining one lot. So this one lot you need to keep as long as possible. Likewise, both side you need to do the same thing. So if you doing like that means you can able to minimize your losses and you can able to enhance your more profit. You can able to book more profit if it is going one sided, like if it is bearish or bullish according to that. Why? Because one particular option will go, because you are exiting one lot with 20, so you are exiting one lot without cost, one side without any side. For example, remaining one lot, this 10 rupees may go to anywhere, even 100 200, if it is extremely bullish or bearish. So you can able to totally investing 40 rupees. So if it is goes one particular lot up to 100 means you can able to end up with 120 points, 80 points as a profit. So that is the way it is. But how we need to trade according to the pre-opening? For example, it is giving you some warning signal as well. Volatile came inside the negative, which indicates that after downfall, if it is not breaking the negative average or the bearish level, it might have chances to recover and go bullish once again. So where the market is going to open, pre-open, if anything opens below the volatile level 2, which is more than 29.13 points, which is indicating the bearish with a stop loss of overall average, which is 14,553. So we need to add 10 points from that particular level. So 14,563.26 is the stop loss for the bearish market. So if it is breaking, then it becomes a volatile market as well. So if this particular level is not breaking on Wednesday and the pre-opening is in the negative below the volatile to more than 29.13 points in the negative side, then it is having chances to go extremely bearish. So that is one point. On the other another points, um, if the market is opens in between the volatile level 1 and volatile 2, indicating the volatile market, but the points are very less, around 31 points inside. So which means which side it is going to break, whether it is going to break the volatile level 2 or the volatile level 1. According to that, it may catch its direction towards to their side respectively. But what we need to keep in mind is that if that is the way it is, the stop loss will change a little bit for the bearish. Resistance level 1 as a stop loss for the bearish. If it is opens inside the volatile level 1 and volatile level 2, so we need to keep stop loss at 14,586.56 as a stop loss for the bearish market. If anything opens in the negative inside the volatile level 2 and volatile level 1. On the bullish side, if anything opens in the positive 1 plus 1 points, we need to keep stop loss in the support level 1 or the overall average. So overall average stop loss we need 14,543.26 as a stop loss for the bullish market. Anything opens, market opens in the positive, if this particular level is not breaking, it might have a chance to go bullish, and it may, and the bullish side is very much limited in the positive, around 36 points. If anything breaks resistance level 5, then only it will go to beyond to n number of times. Other than that, if it is not able to break the resistance level 5, it definitely having the chance to fall. At the same time, the negative side also not having big numbers, which shows around support level 7 around 139. As per comparing with the positive, it is big number, but still we are seeing more numbers comparing these days, around 300 400 points in a day. So which means comparing those, these records are not much higher but still having potential to go any big way on the negative if it is opens below volatile level 2. And one more point which I like to add, which is anything pre-market opens more than 45.27 points in the negative, indicating negative side target of 157 points up to that level. So if it is breaking beyond more than 1%, then it might go heavily bearish too. That is possible due to the absolute frequency indicating evenly poised. So we need to play a little more cautiously. We need to keep both options in hand. Booking every now and then is advisable. That is the reason I asked to buy two lots each on the both sides, 10 rupees. This 10 rupees, which kind of a level you need to buy, that is purely based on the options. For example, I'll give, if the call option somewhere between 200 points. So right now the market is around 14,500, so 200 points means 14,700 for the call option side. 14,700, which is trading at 23, so it is 13 rupees more premium. So we need to wait because it is almost, if we take almost, it is gap between 150 points, so we need to trade 14,750, which means normally 50s are not moving comparing hundreds. So that is the reason I'm a little hesitant, but it is 3 rupees more than the expected, so we can buy this. But I don't know how the moments are going to be, so we can buy this 2 lots and 10 rupees on the put option. The put option we need to buy because it is more premium nowadays, because everyone expecting a bearish, but the market is not happening in that way. So 350, it is more premium than the call option, around 12 rupees more premium. So it has to be somewhere around 10 rupees and only you can able to buy, because you need to wait up to that level, otherwise there is no value to buy at 22. It might erode over a period of time. If it is shrinking, then only you will get lesser price. So that is the way it is. You need to buy 14,750 call option for 10, C for 10, and 14,350 put option for 10. If it is comes to 10 or maybe 12, that is fine. 10 to 12 maximum. Other than that, you need to wait. Then only you will get exit, because if you buy both slots, even if one is not able to buy, that is not a problem. So because we are minimizing our risk, so you both side buy two options. Exit one option with 20 and remaining one lot, let it be. Let's see how the market is going to give us on Wednesday. Thank you.